Good morning, and it is time to hit you up with a little bit of some daily news. What's going on in the market right now as far as the news is concerned? Let's take a little quick peek, see what we can do here. We're going to start with the losers and the gainers in the pre-market. As of time of recording, this is right after market open, so nothing too absurd going on here. So you see Novan down 73% off of a failed study of one of their drugs. So that's the risk of those biopharma stocks. It's a risk. DPW Holdings down 30% on doubts that FINRA approval of proposed acquisitions. Okay, they might not get these acquisitions approved. Investors getting out. Landec down 15% on earnings. Mario Biopharma down 13%. Insight down 10% after one of the drug fails a study. I'm not going to pronounce it. Pulmatrix down 8%. Trillium Therapeutics down 7%. Fuel Cell Energy down 9%. Now, I did have a put option that I had in Fuel Cell, and guess what? I sold it off this morning for a lovely 30% gain, and I am glad I did because now the stock's up today. After this was here, the stock is now reversed and is now trading upward. We have Synthesis Energy Systems down 7%. Recon Technology down 9%, and Neo down 6%. On the winner side, you got Yuma Energy up 66%, Camber Energy up 56% on closing transactions, preferred stock redemptions agreement. Leap Therapeutics up 56% on an exclusive option and license agreement for the clinical development and commercialization of DKN-01 and $27 million equity financing with Biogene and 2 institutional investors. Can-Fight Farm, Biofarm up 21% on encouraging data on one of their drugs. New Concept Energy up 17%. Energy really doing well here. Whiting Petroleum up 13%. NF Energy Saving up 11%. Accorda Therapeutics up 11% on a 0.72 stake. Look at that. Gulfport Energy up 7%. California Resources up 6%. Nabors Industries up 6%. Advaxis up 6%, and then Harmony Gold up 5% as miners rally on Mideast turmoil. And speaking of Mideast turmoil, what is the Mideast turmoil? What's going on with these energy companies? Can't fail to mention. Yikers. So the market's down right now because of a drone strike that killed Iran's top general. This is wild stuff. So obviously, if you look at this guy here, obviously crude oil up quite a bit now because of the fact that this could be some tensions here, and obviously that's why I'm selling. So here you go. You'll see U.S. policy strategist says there's a finally for caution in the stock market. Global oil markets will be volatile for weeks to come. Okay. I mean, it makes sense, obviously. Drone strike, knockout top Iranian general. I mean, there's going to be some tension. There's no denying. But, to be fair, I don't know. That's just some news for you. Let's get into some specific stock news. Ford is been given a low rating by Evercore to underperform. So that's rough for them. They're getting an already rough start to the year. Ford starts off 2020 with an average sell side rating of neutral. So nothing really great going on for Ford besides that lovely dividend, because that yield keeps going up as the stock falls. So I love that. So Apple strikes a new licensing agreement with UK chip designer Imagination Technologies, which says the multi-year agreement will give the tech company access to a wider range of IP in exchange for license fees. Apple previously used Imagination Design GPUs in iPads and iPhones, but the tech giant started using its own internal chips designed in 2017. At the time, Apple told Imagination it would stop using its IP in the new products within 2 years. Imagination shares plummeted, and Cambridge bought the company for $663 million later that year. Good for them. Yeah, good for Imagination Technology, right? Getting a partner with Apple, you gotta love it after them not getting one. You know what I'm saying? TD Ameritrade starts with some bugs, so having issues. So that's rough for them. The apps aren't working at all for them. At least this was yesterday's. The apps just weren't working. You weren't able to do some trades. Currently experiencing some system issues that may impact the accuracy of balances and positions in your account, as well as your ability to place trades. Well, that's rough. That's an app that doesn't work. But overall, I mean, I wasn't gonna be buying or selling, anyways on yesterday either. The market was good for me. I enjoyed it. Things were weird. I just didn't do any buying and selling, except for never mind. I did. That fuel cell energy put. I did buy that. So how about this? Poor REITs yesterday down more than 1% because might have to do with what's become of the annual rite of passage in the markets. Prognosticators prognosticating. Okay, who wrote this? Prognosticators prognosticating a major bear market in bonds. Those higher rates might signal an improving economy. They provide more competition in the income favorites like REITs. Reason number 2, the death of the brick and mortar retail business. Fake news, shift of online buying is an old story, but things have seemed to the point. Holiday sales are up 3.4%, according to MasterCard. Online in sales gained a whopping 18.8%. In-store sales rose 1.2%. It's still raising sales. That's not really a good reason, in my opinion. Regardless, we're going to the next guy. Reported from Rosenblatt, this idiot, reports that Disney may have already 250 million. No, I'm just kidding. 250 million. Just kidding. 25 million subscribers to Disney Plus. No shocker. Thing had 10 million within the first day. 25 million would not be absurd. That's wild. It's been up for 7 weeks, and this thing, it's wild. I'm excited to see what happens. So, it points to a Rosenblatt update from analyst Bernie McTernan on December 29th survey that points at increasing awareness. 96% of respondents aware of the service versus 63% versus October and adoption. So that's good for them. More people know about the service. So obviously people might be buying in the service. Who knows? We'll have 39 million by the end of the fiscal year in September is what this guy says. Above the consensus of 18 million. Frick. That's like, frick. It's double. It's double, baby. More than double. How about this? HBO's Apple TV Plus has signed a 5-year contract with production company former HBO executive Richard Plepler, according to the New York Times. Fake news. Plepler's Eden Production will make television series, documentary, and feature film. All right. Good for them. Good for Apple TV, too. That's what they need to stay competitive. All right. With the both closed on the 2019 year box office, Walt Disney pulled a stunner. That's right. Nailing down a full third of domestic grossings. A third went to Disney. Gosh dang. It's the first time since at least 1999 that a single studio has taken in that big of a share of U.S./Canada grosses. The studio brought in $3.765 billion in domestic revenues. Gosh dang. 33.2% share. Technically not a third. Just saying, 33.3 is a third. Eat that. News article. Next highest was 1.56 billion with AT&T from Warner Bros. You know what I mean? 13.4% from Universal, and Sony got 11.9% of the market there. So too, Disney did not include 20th Century Fox even. Their 5% that they got. So really they did get a third. I'm sorry, I lied to you. Lionsgate trailed with a 6.5%, and Paramount had a 5%. So industry overall fell short of the record, but that's not Disney's fault, but rather the key flops from other majors. You got that right. 6 Disney films that were atop the year's domestic gross charts: Endgame, Lion King, Toy Story 4, Frozen 2, Captain Marvel, and Rise of Skywalker, Star Wars, baby. And while Disney is set to take a bit of a breather on Marvel and Star Wars releases, the industry is shifting resources to streaming wars. Disney still has a film set to open every month for the next 4 years. Holy crap. Apple targets. Oh yeah, they raised the Apple target to 330. Slightly absurd. Bank of America analyst here, Wamsi Mohan, writes that strong growth, long-term benefits of 5G adoption and wearables. So he's raising it to 330. GM deliveries fell 6% this quarter due to, what a shocker, strikes. North American wholesales dropped 25% due to the 40-day strike. Heavy-duty pickups saw a 17% drop. Yikers, that's rough. But that's okay. That's okay for them. Auto sector's also getting a little bit of a hit today, but no shocker, the whole market really is. This is going to obviously explain it to Iranian-U.S. concerns, but I think it's just in general, markets getting sold. Shares of iRobot are slightly higher on a down day. That's right. Piper Jaffray publishes a note earlier today which points to solid demand for iRobot products during key holiday shopping season. The firm still thinks the stock will be range-bound until the trade deal particulars are hashed out. So good thing for iRobot, as I told you. And then Tesla. That's right, I'm talking about Tesla. Tesla's up because of their estimates, or their deliveries topping estimates. They delivered around 112,000 vehicles versus a consensus of 106,000. So good for them. Good for them. Mostly Model 3. No shocker there. It's continued focus on expanding production in both the U.S. and newly launched facility in Shanghai, which has demonstrated production run rate capability of greater than 3,000 units per week. Good for them. Their goal was 5,000 units per week, but that's okay. Good for them. Tesla's up again. If you own Tesla, good for you. That's it for the news today, baby.